Okay, guys, welcome back to the channel. Matt with Green Bar Trading here. Welcome back to another weekly watch list video where we go over everything that you should expect next week in the stock market. Our earnings for the week. This is, obviously earnings season is starting to dwindle down, but if anybody's interested in trading around earnings, these are the companies that have them this week. Okay, now I want to go over our economic calendar from last week. That's really what propelled the market through that consolidation that we have seen for the last month or so. So last week, what we saw here, going back to Wednesday, that was the big moving event at 1:30. That's when Powell spoke. Now, a lot of people were expecting the same Powell that we just heard a month ago, which was hawkish. We're going to have to raise rates higher, keep them there longer. Well, what we heard this past week on Wednesday, which caused the market to go straight up like a rocket ship, was a very dovish tone. All right, extremely dovish. So that's what made the market go up. He was just, it was like it was a totally different person, somebody that wanted the market to rally, and it really did. So that was on Wednesday. On Thursday, we had some inflation data come in that was better than expected. And then on Friday, all right, we had the big payroll number, and it was a huge beat over estimates. Now, in a normal world, in a normal, Fed rate cycle, you would see that as being a good thing. More workers, businesses have so much demand that they are hiring more jobs, average hourly earnings, a huge beat. That all should be good things. But in this market, the Fed, their number one goal now at this point, because we're obviously seeing inflation roll over. That's very obvious. But the labor market, that is going to continue to play a role in the Fed's decision. Because if a wage price spiral happens, which is what they look at, then inflation can really stay high for longer. If people are paying people more money, the employers obviously have to recoup that. And how do they recoup paying higher wages? They pass that off to the consumer, the customer, right? And we end up paying for it. And that makes inflation, especially in the services side, a lot higher. So that was last week. That's a brief recap on why the market moved last week on those things. Now, this coming week, while we're on it, is a very, very easy economic calendar week. We love these weeks. The only thing is, and what has continued to kind of be a market mover, which normally wouldn't be, but like I said, we're dealing with the labor market. That's a major market mover at this point, is the initial jobless claims that we get every week. And that's what's expected right here. And last week we saw the initial jobless claims move the markets as well. So that is just something that is going to continue to move markets. But, as far as the week goes, really not that interested. But we do have the PPI on Friday. So that's the only thing. The PPI on Friday, the initial jobless claims, those are definitely things to know. As far as that, we have a very easy economic calendar week. So that's a good thing. All right. So looking at last week, seeing what the sectors did, we're starting to see that continuation of energy going from the top, with the 1 week relative performance, and it slipped down, started to slip down, and now it's at the bottom. All right. Energy has been falling down this, especially for the past month. So as the market rallied up, energy did not really contribute that much. We got a lot more contributions from technology. Obviously, a lot of stocks that were really beaten down have had a very good month. All right. So that is the sectors. And then looking at the correlation of the 10-year Treasury yield and the S&P 500. This has been all year, but just for the last month, I want to show you guys, as we've climbed out of the bottom, the yields have gone way down. 14% down for the 10-year Treasury yield on the month, and our market up 8%, the S&P 500. All right. That's a very, very nice last month for the markets. So as the yields go down, inverse correlation, the markets go up. So keep that in mind. All right. So we went over that stuff there. Let's look at our compass, right? You guys know I start these looking at the charts with the SPY. It's a very good gauge for how the overall market is looking. All right, so this is what we have on the daily chart. Very clear downtrend. We have multiple touches of this trend line. Everybody has this trend line on their charts. We had another rejection here, and if we zoom in, that's exactly where we are on Friday. All right, so on Monday, it's going to be very interesting to see if we can hold over that trend line. These two trend lines have been pretty good. So this move on up from October, this green trend line has been very nice. Multiple touches of it. And the breakout of this consolidation, it happened on Powell's speech, broke the 200 moving average, and then had trouble here at this trend line, pulled on back, and then closed the day right here. It was still down for the day, but we gapped down so much right into that demand, and we saw a close over the 200. So, like I've been saying in multiple videos, all right, multiple weekly watch list videos for probably the past 2 months, was this could be the bottoming process. Now, all the way back here, we chronicled this very, very closely with the 20 EMA, the 50 moving average, and breaking it, coming back down, breaking it again, and then finally getting that cross of the 20 EMA over the 50 moving average that we've seen here in the past have explosive returns after. All right, so that's just the continuation. The overall daily chart to me, from a technical point of view only, forget fundamentals and PEs and all that, this looks like if we can break this trend line, that we could continue on higher. Now, where to? Who knows? We could have, you know, a very nice 3-4 weeks left before January, and then all bets are off. And I think that will come back down even more. But the rally can continue here, but this trend line has to break. All right, we've consolidated, we've punched out of that consolidation, we've retested it, and now we're at this trend line. So this week is very important. We're going to want to see, for the bulls, the trend line break. If it doesn't break and we consolidate a little bit more, you have this trend line down here, and then you have your moving averages. But it looks like it wants to set up for a break. The last time it touched the trend lines, you can see it pull back pretty quickly. You know, it did kind of hang around, but this one is right back to the trend line. So the market, it looks good as far as that continuation goes. Kind of the same trading pattern back here in the summer. and we can just look at that on the SPX, these white lines right here, all right? These white lines are from the low, so the June lows, that summer rally, right? And then you have the lows here in October, and this current rally, well, these white lines are just about 17%, 18%, all right? If we reject here, it's going to be the same percentage gain for this previous spot here. So just a pattern, just something to be aware of, that's what we've seen in the past. All right, so this trend line is very, very key. It's really important to break if we want to see that continuation a little bit higher. So 4,100 on the S&P 500, that was that clear supply zone. All right, when you see a hit of a key level and then a drop that drastic, that means that there's just overhead supply here at 4,100 on the SPY. That's 410. Right here, you can see this trend line. Let's pull it back a little bit. Right here, 4,100 is 410 on the SPY. That's what we need to see break. And if it does, then things are going to look good for the next couple weeks. All right, so that's the SPY. Going over to the Qs. The Qs just grinding its way back up, right? Just grinding on up. But we've seen here, this level here has been a little bit of a problem, okay? You can see back here, if we extend it to the left, it was support here, it was resistance here. This is some, this is definitely a spot where we're going to want to see break. If we do see it break, the 20 EMA, that's the next target. All right, we're sitting on that right now. Monday and Tuesday are going to be so important as far as the charts go, where we open up. All right, so that's the Qs. The IWM has had such a clear rejection at previous supply right up here. It was support, support, support. I mean, resistance once it breaks down. So you got resistance. You break over it, it pulls back, and then can't get over it here. Huge drop to June lows. But it held up nice, consolidated, and rode this trend line on up. Broke its key indicators. Looked very good. We're coming into this same area right here. 188 to 190. If we can get some breaks of this, these are the small caps. That's what the Russell 2K is. This is just an ETF that follows it. A lot of people are saying that the small caps are a good value right now. All right, we saw the trend line break. This trend line was very consistent from the highs up here that we saw last year. Touched it to the penny here, couldn't break it here, finally broke it, retested it, and now we're over the trend line. We're just not over this supply here. All right, so we'll see what happens on the IWM, on the Russell. The Dow is one of the better performers of where we opened up. It's only down about 5 or 6%. The Dow is only down 5 or 6%. That is just a huge outperformer of the S&P 500, a huge outperformer of the Qs. So that's where the strength is right now in the Dow. There's 30 stocks that make up the Dow. All right, so that's where we are here. I want to look at some of the stocks that I'm watching right now. Netflix is one of them. If I can get the ticker symbol here, NFLX. All right, pretty clear pattern, very clear. This is just a gap fill on the daily chart, and that is to 330. So that's only 10 up from here. All right, not a huge move, but this is a bottoming out, a very nice bottoming out, and then that higher highs, higher lows, very nice pattern, very nice trend set up here. But you're going to come to this gap fill here at 330. Watch how it behaves at that point. I'm sure a lot of traders are going to be taking profit or getting short at that level. So that's going to be a key level. So what I'm going to do is I'm going to create an alert at or above. We're going to want to get probably eyes on this before. So I want to see 50. 329.50. This will go off if it gets above that level. So I set an alert here. This is what I'm going to start to do on the charts that I'm looking at. I'm going to start to set alerts to try to get really good entries into some of these, or just watch price action around those areas. So Tesla, these are the key levels here on Tesla. This kind of, to me, let's look at this on a bigger time frame. It looks like it is forming a bit of that inverse head and shoulders. Trying to find a better view of it. All right, so right here you have an inverse type of head and shoulders. You have a shoulder here, you have the shoulder here, you have the head down here, and then for that next move up higher. All right, that's just what happens sometimes on a stock that's looking to reverse. It's looking to see this inverse head and shoulders that can possibly form before it rallies back up to previous highs here. Now, I'm not saying that is going to happen, but it is a very volatile stock. This stock can definitely move. It's been beaten down a lot. That being said, the fundamentals of it, not that anybody really trades it with the fundamentals in mind, it is very overpriced. But as far as the chart goes, I mean, looking back here, if you liked it up here at 414, now this has split. So if you liked it up here at 1400, all right, why wouldn't you like it down here at 190, which is times 3? You have 200, about 585, 590, just well off its highs for the year. All right. So that's just a little pattern. It's just something that I'm looking at here. If we look at this on a shorter time frame, this is where we see that support turned resistance now should be support again, as it made this move off of the bottom, made higher highs, started to make higher lows, and then broke out of this and now has been pulling back a little bit, but had a nice close on Friday. All right, so that's Tesla. Just keep it on watch. Going back to the daily chart, I'm going to put on the XLE. The XLE, I also set an alert right here. My alert on XLE is when it's above 92.50. All right, I want to see what happens here at resistance. This is having a very tough time finding more buyers to break out. This looks like it's stalling to me and can possibly pull on back. I show the weekly chart on this a lot, and I'll pull it up here. This is a head and shoulders on the weekly. You have a shoulder here, head here, shoulder here. This is at the same level that this is right here. All right, for this year, this is a double top. It's resistance. It can't seem to push out, but it has been one of the best performing sectors for the year. So you hate to bet against it, but you can see if we see a rally for this next couple weeks, maybe this does pull on back. Maybe it's inversely related to the overall market, like we see with energy starting to become, sliding down that sector's relative performance. So we'll see what happens. That's XLE. And then we'll look at Google on the daily. And we have a very similar pattern here to Tesla, right? So you kind of have that shoulder, that head, and now another shoulder forming here. Can it break this key level? This white line right here at 102 is a very key level for Google. If it can't break it, then maybe you continue that going down for the rest of the year. But you can see this thing trades in ranges. So this could be in a new range. Just something to be aware of. You got that 95 clear support, 94-ish, that clear support, and then you have a high here of that 102, 103 area. So we'll see what happens with Google. Just another one to keep on watch. All right, guys, so that's it. Hit the thumbs up. I do appreciate you guys watching, and good luck this week. Take care, guys.